So in today's video, let's look at how many homes have really sold in the United States in the last 25 years. This is the chart that I'm going to show you and talk about it a little bit. We're going to cover the Portland metro area. Lockbox access had a big old drop, 23.9% drop last week. What happened there? And then we're going to look at the interest rate quickly. The MLS data for the Bethany zip code 97229. This is just to Washington County, not including Multnomah County. And then we're going to look at Alto's report. Welcome back to Bethany Real Estate. This is Shawn Yu from Shawn Realty. So in zip code 97229, so this one includes the Forest Heights and North Plains. Right now, median price is about $900,000. And the price per square foot is $307, which it came down a little bit. We were at as high as about $315 beginning of May. I wonder if this is due to like the restarting war. I'm not sure. Average days on the market has come down quite a bit. We were at like 110 day-ish. Now it's 88 days. By the way, this 88 days including the pending time. So when you get an offer, if it closes in, let's say, 45 days, it's including that 45 days. Certain days on the market, it only includes from the active listing until when it goes under contract. Yeah. So you have to see what it is because every websites they have different, methodology. So median days on the market 42 days. So this is, I believe, when you get an offer. So that's about 42 days is a median be on the market to get an offer. Price decreased is 40%, which has been increasing. So in the spring market is more active, a little bit more lively. When you go toward the summer, like now, it gets a little bit stale. Things aren't as exciting. I don't know if that's the right word to use here. But in the spring, about 30%, maybe 35% of the listings were having price reduction to get the offer attracted. But now it's about 40%. Price increase, only 2%. That's a head scratcher. I don't know why people do this, but it is here. Real estate 2%. This doesn't have much impact. Now, inventory is rising. So this explains why I said what I said. In the spring market, it's more exciting. It's more lively. It's more bouncy, It's because there's less inventory, less competing listings. Now that competing listing number has been increasing as gradually as you can see. I mean, this is seasonality too, but at the same time, rate environment changing, but it's more dependent on the seasonality. So we have this real estate seasonality cycle. When you go toward the summer, inventory increase. At the same time, price per square foot increase too in some sense, but it takes a little bit longer to sell, a little bit more competition for the sellers. Maybe slightly less competition for the buyers. Median rent went up. Now, this one, I believe, is because of the Intel layoffs. Now, I see a lot more rental properties hitting our neighborhood right now. Bauer Highlands and Bethany neighborhood. It's because of the Intel layoffs. A lot of people are moving out. They're moving to Texas, California. Those two are the I see most. When I talk to people, they move to either Texas or California. either Samsung or maybe another Intel office down there in California. So when you see a lot of bigger homes, when I say bigger homes, size bigger than about 3,000 square foot, maybe 2,700 square foot and above, I see it as a bigger home. And those homes will have the higher rental rate, right? So when you have a four bedroom, like 5 bedroom homes, they're going to have a much more expensive rental, and that's why I believe this median rent price is going up quite a bit. Yeah, and let's look at a few more things based on the segment. Can you see this part? Yeah. So I need to make it smaller. Now you can see it. So this one is basically evenly dividing up the price range by 25% and see which quarter has what kind of activity. So the top one is 1.4 million, about 4,400 square feet, about quarter of an acre to about half an acre, 5 beds, 4 bath. Uh, about 6 new listings hit the market in the last week, and one just got sold. 56 days on the market. The next segment is slightly below 1 million, about 3,400 square feet. And this one is about zero point 0.2 acre-ish, five, three and a half, six came on the market, and three sold. 49 days. The next one is 208. I'm sorry, $820,000, 2,700 square feet. It's hard to talk today. I don't know why. Maybe because the weather is too nice outside. Maybe I want to play. 4 bath, 3 bath, 9 hit the market, 9 sold. So this market is more active, that's for sure. 42 days on the market. The bottom quarter is $650,000 and 1,900 square feet, 3 and 2.5, 7 and 7. So that's pretty active too. So it's pretty much like 1 week we get 7 listings and then everything goes under contract. But then that's not the reality. So there are going to be existing inventory. Let's say about one. I want to say about right now we have about 40 homes within that price range, right? And then 7 brand new listings come up, so it becomes 47. And out of 47, the top 7 just got sold. So there are homes that are not selling right now, about 40 of them, right? So you have to understand that days on the market is 28 days. So this one, to me, tells me it takes about 3 to 4 weeks to get that offer. That's what it means. And some homes are going to sell on the first day. Some homes are going to sit on the market for 3 months. Okay? So that's what's happening on Alto's report. Let's jump over to MLS. So it says 177 active, 1 short sale pending, 22 pending the last 2 weeks on this report, and then overall 30 homes sold in the last 2 weeks. Right now, the most expensive one is 3.65 million. The cheapest one, the single family, is 475. $331 per square foot. This is pretty high, and it's a sign of the market recovering. Short sale pending one is 329, so $500,000. 22 pending, $310 per square foot. Lowest one is 525. Highest one is 1.275 million. And let's see, 30 sold. Wow, this is surprising. $330 per square foot is sold, which is, wow, yeah. It tells me that more of a smaller homes got sold than the bigger homes. Now, typically the smaller homes have higher price per square foot. if that makes sense. It's because of the land cost. So when you have a zero point 0.1 acre, if you build 2,000 square foot home versus 3,000 square foot home, three level, the cheaper homes are going to have higher price per square foot. It's because of the land cost and building cost. So that's pretty high. That's again telling me the market is recovering slowly and steadily. The sold price per original list price is 97.55%. So about 2.5% lower than the original list price, which means that the sellers are, doing pricing right. Sellers are pricing right, and buyers are getting some negotiation done, but not huge. 2.5% seller concession or price reduction is reasonable in my opinion. And this also tells me that it's not as hot as it used to be, like 2021, obviously, when things were selling at 115%, right? Okay, let's move over to the mortgage rate. So mortgage rate has been going up and down between 6.25 or 6.375 based on the On Point Credit Union, which I go by. And they seem to offer really good loan products. I personally use them too, and I recommend them to anybody. Now, the Lockbox access, this actually surprised me a bit. Do you see that dip right there? Yeah, right there. Yeah, right there. So last week, it dropped big time. I mean, we need to get somewhere in 20,000 lockbox per week open. I like to see 23,000. Then it's like really, really happening. Buyers are going out but last week we had 15,599 lock boxes were open. So a lot of people went on vacation, I think. Vacation, maybe seaside, Cannon Beach, maybe Mount Hood. Yeah, that's what's happening. So yeah, 4th of July. Yeah, people do a lot of fireworks. Yeah, that's what happened. Yep, in Vancouver side too. Now let's look at lastly the home. So this one basically shows you how many homes, the resale homes and brand new homes were sold in the countrywide every year. So I went back to 2000, 6.05 million. And it's pretty consistent until 2003, jumped to 7 million. And this is when you see that movie Big Short, this is the start of like everybody's buying multiple homes because the lenders didn't check their credit, employment history, just like bad loans. And it's gradually going up. 2005 was the peak. 8.36 million homes were sold. And we haven't seen anything like that since then. That was a boom peak. Unfortunately, I personally bought a home in Portland, Oregon. When we moved here, we bought a home, we overpaid. And I talk about this story because my agent was really bad. And so we end up overpaying, and we lost close to about $35,000 on a $250,000 home. So we lost more than 10%, that's for sure. It was bad. Which made me realize that I can do better than her, So I ended up getting licensed in 2008 and promised that I would do way better. I would do no harm to the buyers. Let's see, 2006, still high, 7.5. 2007, still high, 6.44, right? 6.43. And then 2008, boom, 4.6, which is very similar to right now in 2025 and 6. So this is what we're experiencing. 4.6, 4.7 range. And this tells me that it feels like it's frozen. But again, people are still buying and selling. You have to understand that. But the reality is more of the real estate agents are quitting right now because they're not getting enough business. Same thing with the loan officers. When I talked to a loan officer about 3 months ago, one loan office, let go about 90% of the loan officers. So if they had 100 loan officers, like 90 of them quit. So that's what it means. Now let's kind of zoom through, and I see another pattern here. So from 2008, 9, 10, 11, it's under 5 million, right? And then 2012, kind of like 5. So from 2008 to 2012, that's about what, 4 years, right? 5 years. 5 years, it was like mid 4 or low 5. It lasted 5 years for the consumers to realize, oh, maybe it's time to buy. Maybe I need to buy. I've been waiting for too long. I need to buy. I need to start buy. So start buying time is 2013. And I remember when I was at Keller Williams on Barnes Road as an agent. In 2013, I remember seeing like, oh, I'm getting more transactions. I'm getting more calls. I'm getting more listings and more buyers. And I remember that. And then it gradually increased from 2014, 15, 16, 17, and 18, and 19, 20. And this is when like 5.5 million to about 6.5 million. And that felt like, oh yeah, now I can make some more money. I'm closing more deals. In fact, my best year might have been one of the best years might have been 2016-ish, I think. I remember one month I had like 10, about 12 deals all in one month, which was I believe in July or August. Yeah, as a single agent, that was I was really busy, and I was actually thankful. Remember feeling you only remember the feeling a lot of times, right? And I was grateful that I had a MacBook because I had to be super fast on the sending offers, making counter offer, doing the updates, email, text. If I had like HP that gets stuck and slows down, I wouldn't be able to send in an offer within 20 minutes. I mean, I remember making for Kurt, I think for Kurt, it was like we had 20 minutes to make an offer, and Kurt was like, "Yeah, we need to make an offer." I'm like, "Let me try to see if I can make the time," and I ended up making an offer in 20 minutes, and then we got the deal. And if I didn't have that little MacBook, which I might be one of my kids still use. I don't know. I mean, it was so awesome. But that was 20, either 16 or 17, I want to say. So 6 million is when a lot of realtors are really busy. And I actually posted Oregon, the Portland Metro too. So let's look at here. Yeah, so 2016 and 2017, we had about 29,000 to about 33,000 deals closed that year. So that's kind of like the peak for us. Yeah. Because if you compare the 2005 peak, it's only 35,000. So we were very close to the boom peak. That's why I felt that way. Now going back to the national data. So one pattern that I mentioned earlier was the recovery time takes about 4 to 5 years for the consumers feel like, oh, they can do something. And I'm wondering if since we had, let's say, really the bottom market has been since 2022 or 2023. 2022 5.67 million, that is seem kind of high because the beginning part of 2022 was still the low interest rate environment, and then in April or May it jumped to like double or tripled. So based on that, my assumption is if it takes 4 to 5 years to recover, 2023, 4, 5, 6, either 2026, which is now, or 2007, we're going to see low 5 or high 4 million homes. And then 2028, 9, 10, 11, no, where am I going? 2028, 2029, 2030, 31, 32. That's when we're going to see more like this mid 5 to 6 million range, which that means it's going to be another recovery phase. It's like stock market, right? You go up, it drops, and then it's recover, and then go to the peak and then drop, right? So that's what I see here. And right now it feels like, oh, it's, the economy is really bad. The mortgage rate is still high, price is so high. But what I see right now is first-time buyers are buying right now. They understand that they need home. It's better than renting. They're getting help from their parents on down payment, or they're putting more, and then they're trying to get into the home ownership. I helped a lot of first-time buyers in the last about 6 months to about 10 months. And so the smart buyers are going to be starting now. Well, I can't say that. Well, savvy buyers. Savvy buyers are buying now, and not so savvy buyers, kind of like late buyers, are going to come in next year and then next following year. And so I anticipate 2027, 8, 9, and 2030, we're going to have like 5.5 million to maybe close to 6 million range again. Then there are going to be more realtors coming in, brand new realtors, brand new loan officers will, kind of flood the market. So that's what I predict. Anyways, that's it for today's video. Thanks for listening. Thanks for watching. As you know, English is my second language, and some days my tongue does not want to move. It's like bleh, 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 bleh. And I talk like Konglish, accent, like almost like German speakers have that, right? Very. Anyways, thanks for watching. All right. Have a great summer. If you have any questions about Portland, Oregon market, give me a call 503-515-4499, or you can Google my name, Shawn Realty. You'll find me. And I'll see you in the next video.